that year, it was disposed, so we will not continue the asset. This is the end of provision for depreciation account using this question, using straight line method of depreciation. The value of depreciation, recap, of 800, 800, 800, and 800 remain the same because we use straight line method of depreciation. Straight line will use the same value of depreciation for each year. Assets that will serve you evenly over years. Usually, accountants will often use straight line method of depreciation for those assets. Example like computer system of a machine, of a firm. Oftentimes, a firm will use straight line method of depreciation for a computer. So back to where I stopped earlier. Now, this is the end of provision for depreciation account. Now, the next thing to prepare is the disposal account. Disposal account. Now, in disposal account, the value of accumulated depreciation at the end of year 4. This is the accumulated depreciation. That's the total depreciation at the end of the 4th year. The point at which the asset was disposed is 3,200. That's 800 in year 1, plus the 800 in year 2, plus the 800 in year 3, plus the 800 in year 4. It did not cross to year 5. So the total depreciation at the point of disposal is 3,200. And if it is debited here, if you remember the double entry principle, that every debit entry will have a corresponding credit entry. So if the value is in the debit side here, it must be in the credit side of disposal account. So it will be written as, so that's year 4 or 2013 December. So year 4, it's coming from provision for depreciation account. Provision for depreciation account. That is 3,200. Now, how much was the asset sold for? If you remember, this question says it was sold for 1,500. It was sold for 1,500. Now, the sales value, if we remember, to make this quite easy, let me open machinery account. So let me call this account account 1, let me call this account 2, and let me open machinery account and call it account 3. Sorry, machinery account. Machinery account. When it was purchased in 2010, it was purchased for 5,000, and now it was disposed in 2013 for 5,000. Yeah, that's the cost. The value was disposed in 2013. Do you get this? It was bought here, we debit, we receive. It was disposed here, so we credit here. So now, the value of the disposal here, that's the cost value. The amount it was purchased for was $5,000. So the cost will be brought, if it is in the credit side here, we will record it in the debit side here. That is principle of double entry. For every debit entry, there must be a corresponding credit entry, and vice versa. So, machinery account at cost, $5,000. Now, if provision for depreciation is 3,200 and it costs the firm $5,000, now the next thing is the value that it was sold for. If it was sold for cash book will be debited, disposal account will be credited. If it was sold on credit, the name of the person it was sold or the firm it was sold to will be debited. That's the person or the firm will receive the assets. Then the value will be credited in the disposal account. Let me say it again. If it was this 1,500 was sold in cash, cash book of the firm will be debited. Cash will come in, asset goes out. And when the asset goes out, it will be credited. And if it was sold on credit, then the firm it was sold to on credit will be debited. That's the firm that will receive it. Then disposal account is giving up asset to be credited. So that's cash. Assuming this was in cash, so cash book will be debited and it will be credited here. So the total of this point, the total is 1,500. But if you remember, there is still a value of 1,000 that is left for the last year that was not enjoyed yet. It was supposed to last for 5 years, and at the end of the 4th year, it was sold off. The accumulated depreciation at that point is 3,200. Hence, normally, the net book value of that asset at that point should be 1,800. It was purchased for 5 years. We have used it for 4 years. Each year, 800 will be used. That means at the end of the 4th year, the net book value of that asset should normally be 1,800. But it was sold for how much? It was sold for 1,500. That means there is a shortfall of $300. And that shortfall will be shown here. The total here is 5,000, right? And the total here is what? 4,700. That means it costs the business more than the benefits. Cost of disposal, cost incurred on the asset will be in the debit side. The benefit enjoyed on the asset will be here. Remember, benefit is how the asset served us. It served the firm for 4 years. Hence, the depreciation altogether was 3,200. And again, it was sold for 1,500. That's also benefit. The addition of the benefit was $4,700. And the cost was 5,000. Hence, if the cost side is more than the benefit side, there is loss in disposal. Or there is loss on the disposal of assets. So you can either call this loss on disposal, or you can call it P&L account or income statement. Let me just make it easy. Loss on disposal is $300. This loss on disposal, this value of 300 will be an expense in the income statement of the firm. Let me do a quick recap. For provision for depreciation accounts, we show the value of reduction of assets for each year, and that can be done with different methods of depreciation. That has been done already in this topic. Please kindly check that topic, depreciation of assets. Now, we assume that straight line method is to be used in this question. Any method can be used, but please take note, the value in straight line is the same for each year. For straight line, for reducing balance, revaluation, and the other methods, the value for each year will be different. So it is the value for each year that you will slot in here. That's the value you write to income statement. That will slot here, that will slot in here, that will slot in here. Normally, if the asset lasted for 5 years, there will be no problem. It will just be scrapped. But here, at the end of the 4th year, it was disposed. So it is at that point that we calculate the total depreciation, which is the same as aggregate or accumulated depreciation, which is 3,200. So we stop here because that's when the asset stops its existence with the firm. So next is to prepare disposal account. Let me do a recap of that disposal account to make it easy for you to always remember. The left side is the cost side. That's the cost value of that asset you are disposing. The amount it costs you, the purchase cost of that asset is in the left side, the debit side. Then the benefits you enjoy is in the credit side. Benefit is the total enjoyment of usage. That's your aggregate depreciation, which was in the debit side here, it must be in the credit side here. Also, the cash that you sold it for, if you sold it for cash, it will be here. If you sold it on credit, it will still be here. The firm that purchases it on credit will be debited. The disposal will be credited. On the other hand, if you part exchange the assets, the value of the assets you are exchanging will be here. In short, any benefit you enjoy on the asset will be here. So if the benefit side is more than the cost side, there is profit on disposal. If the benefit side is more than the cost side, there will be the difference will be here in this left side, which is profit on disposal. It will be part of income in income statement. But in this question, the cost side is 5,000, the benefit side is 4,700. Hence, the 300 shortfall is a loss on disposal, which is treated as expense in income statement. This will be the point that will end today's topic on provision for depreciation and disposal account. If you have any comment or any question or anything you want to know or you want me to do again pertaining this topic, kindly put it on the comment section. Also, you may watch depreciation account as it has been released already in this channel. Thank you very much. Hope to see you again next time. Thank you.